Robert Plank Show, episode 199, Financial Gravity, Lower Tax and Higher Profits with John Pollock. Hey everyone, and welcome back to the Robert Plank Show. We're joined today by John Pollock, and he's the CEO of Financial Gravity. And after seeing the lack of integrated advice for business owners across tax planning, financial services, and business strategy, he created the first national tax firm specifically designed to help entrepreneurs reduce their personal tax liability by an average of $21,000. Can't wait to talk about that. How are things today, Mr. John?
They are fantastic. Great weather here in Dallas, and I'm thrilled to be here.
Awesome. Well, I'm excited to have you on, and weather is just quite the same here in California. So I can't wait to jump on in and talk about this super sexy, super exciting. Everyone's always asking, can I hear more about this tax stuff?
Well, I will open up your mind to a world of opportunities. So I grew up in Southern California, so I know all about California.
Cool, yeah, and so kind of talking about this whole like entrepreneur and taxing. Like this was something where I don't know, like I always heard about this. I always heard, well, all these different reasons not to be an entrepreneur, right? People said, well, you're gonna go into all this debt, you're gonna put in all these hours, you're not gonna have this like safety net, so to speak, of having this full-time job. And then once my business kind of started taking off, then this tax problem, this huge thing just seemed to come out of nowhere, and suddenly I found myself at the time having to pay this huge bill, having to be on the hook for all this money. And even at the time, I kind of thought, okay, well, I'll have some of my write-offs, I'll have a few things, but I definitely didn't take it very seriously and cut my tax bill a little bit. And then it seemed like the paying this huge amount of income tax was this sort of huge monkey on my back as an entrepreneur, that I always thought that I could just make more money, pay more taxes, but then income went up, taxes went up even more. So can you kind of talk to us a little bit about that?
Yeah, so I mean, your story is my story. So, and I'm assuming if your listeners are people that are on their way, if they're early in their entrepreneurial journey, this is going to blindside them, as it did with you and as it did with me. So let me give you my story. So my story was I was a wealth management firm. So I'm in financial services, so I should know better, right? Well, I didn't. So we were growing and I wanted to expand. So I set aside, because I'm, a good financial guy, and I wanted to set the cash aside for a office expansion. So I set aside $50,000. The office expansion was going to be done in March, and I wrote the check in March. But what I'd found out is, because I'm an S corp, that $50,000 that was in my bank account in the previous year counts as income. So now I'm having to pay taxes on something that I saved to pay a bill. But that bill just came due, and now I'm borrowing money to pay the taxes. And this is a problem that exists for lots of entrepreneurs. And so I ended up owing $12,500 in taxes, which I didn't save for because I had this expense. And after all, expenses are tax deductions. Well, come to find out, because I had a 5-year lease, I couldn't even expense the whole $50,000. I had to spread it out over 5 years. So I didn't even get the deduction all at once. So this all of a sudden kind of made me realize, wow, this is a problem, because if I'm in financial services and I know how to speak the financial services language, how does someone that doesn't know this? Well, I went to where everybody goes for tax advice, to the accountant. And I then found out another huge problem. Accountants aren't trained to lower your taxes. So now we have an entire industry that everybody thinks solves a problem. The entire industry is not trained to solve, which is a problem. Because if I'm going to the accountant and saying, how do I lower my taxes, and they don't know how to do it, or they pretend like, because the CPA exam doesn't have a single question in it on how to lower taxes. It has lots of questions on depreciation, the difference between cash accounting and accrual accounting, how to depreciate one asset versus another asset, what's double ledger account, all this stuff that you and I don't even care about, because we're entrepreneurs. And I joke with people all the time, I can't read a profit and loss and balance sheet, and you're supposed to tell me how I'm supposed to read all these reports from accountants. So they're obviously smart people, because they have these really complicated reports, but it doesn't help me with the one thing I want, which is, how do I pay less in taxes? So when I ran into this problem, I realized that it was a bigger problem than I even realized, and I sought to solve it. So the next 5, 6 years and hundreds of thousands of dollars later, we have developed a firm and are now selling services directly to entrepreneurs and small business owners, as well as teaching the financial services world how to do this, as well as teaching accountants how to do this. In fact, we just recently developed a program called Certified Tax Master, where we teach CPAs and EAs how to help people lower their taxes, because it's a mission. It's actually not almost a mission, it's a mission. We keep getting told by presidential elects and presidential candidates that the small business is a backbone of society, and then everybody on both sides of the aisle starts to pile on taxes to the small business owner. The good news is that there's 70,000 pages of code, and there's tons of good stuff in there for the business owner to use. It's just no one's really teaching them how to use it. So that's where we come in. We come in and we say, look, follow these laws. There's actually only 5 or 6 pages of laws that actually tax you. And then there's 70,000 pages of laws on how to get out of the tax. And no one's using the 70,000 pages. Everyone's focusing on the 5 or 6. So we've kind of flipped it and said, look, if there's 70,000 pages that were written for us to use, let's figure out how to use it. I mean, isn't that why they went through the trouble of going through 2 houses and getting a president to sign it? And the answer is yes. They went through the trouble of passing these laws, and some people are afraid of some of them. You know, we're not afraid of the mortgage interest deduction because everyone knows about that. We're not afraid of the charitable deductions, but we're afraid to use these other obscure ones like I can stash $1.2 million a year tax-free. Why aren't we using that one? If we are doing very well and we can afford to stash $1.2 million, why would I pay taxes on that? Especially like you in California. So you're going to be in the 43.4 tax bracket, plus you're going to add another, 13% for California? So you're closing in on 60% in taxes, and I can show you a way not to pay 60% in taxes? Why don't you do that? I mean, we get mad at Apple for setting up companies in Ireland, but yeah, we have all kinds of really great tax codes within our own tax strategies within our own tax codes. So that's what we're here for. We're here to help you start to tap into those, and even the more obscure ones. Like for instance, so a lot of people are like, well, I can't do 1.2 million. I don't have that kind of money. I'm a new guy, and if I make $40,000 this year, it'll be a home run. Well, did you know that you can rent your house to yourself 14 days a year, tax free?
Really?
Yeah, it's been in the code for decades. So go online and look up the Augusta rule. I think it wasn't actually written for the Augusta, but since it's 14 days, a lot of homeowners that live on the Augusta golf course for the Masters tournament will rent their homes out for 14 days a year. And all that rental income is tax-free income. So, but it's a real part of the tax code. Virtually everybody that's listening to this right now, if you're an entrepreneur or small business owner, you can use this rule. And virtually nobody that's listening to this right now is using it.
I mean, that's amazing. And is there any kind of fear in like some of these, I don't know if they're called loopholes or not, but some of these, little hidden gems and things like that? Like, is there any worry in like if someone takes it and like gets in trouble? Like, is this a thing that you've been doing, for example, this Augusta rule? Have you been doing this for a few years?
Oh yeah, so we have a network of over 600 CPAs and EAs that have been using it for years and years and years. So here's the thing: you're asking a very valid question, and the way I explain it to people is, look, the IRS is a collection agency. That's the stark reality, and collection agencies are going to go after people that don't know the tax code, not people that do know the tax code. So if you're using an obscure rule, for some reason, it's like everybody's got this backwards. Because I'm using the tax code, that is law. So I'm using and following the law, therefore I'm likely to get audited? That doesn't make any sense. But that's, for some reason, the IRS has done a very good marketing job of convincing us that by using the laws that were written for us by Congress, by using those, all of a sudden we're at greater risk. And that's actually not true. It's actually the flip side. So let me give you an example of this. A sole proprietor that makes $100,000 in gross revenue. So that's a pretty small company. $100,000 in gross revenue. I mean, if I own a Subway shop, I may be taking home $40,000 in income, but I'm doing more than $100,000 in gross revenue. So a sole proprietor that is doing $100,000 in gross revenue is 5 times more likely to be audited than an S corp. But most people, and you can save 7.5% in self-employment tax by moving from a sole proprietor to an S corp. So that one move can dramatically lower your self-employment tax, and it actually lowers your audit risk. But everybody thinks the exact opposite is true. Well, and it's not even a loophole. It's just a different business entity. So, and this is what's interesting. So the way I explain it is this. Are you more likely to be pulled over from using the red light properly or using the green light properly? So if I go through an intersection following the green light laws, am I more likely to get a ticket? And the answer is obviously no. The green lights, you're allowed to go through a green light. So why is it that people think they're going to get audited by using a part of the law that, because they haven't heard of it, is obscure? Because many parts of the laws are obscure because you haven't heard of it. I mean, you know that when you're growing up as a kid, you know your mortgage interest is a deduction because your parents did that. And you know that your parents, gave away clothes and they got this receipt thing. So you know that's a deduction. So that doesn't seem obscure to you. But all of a sudden I tell you that you can rent your house to yourself for 14 days. That is obscure because where would you have heard of that? I mean, what circle would you have run in that knows that? The one I love is that everyone thinks that writing off a home office is a red flag. And my joke on that one is that it hasn't been a red flag since Al Gore invented the internet. And the reason for that is because a home office it's the way we do business today. Most podcasters are doing it out of a home office. And there's actually 4 separate ways within the tax code that you can write off a home office. 4 different ways. So if it was a red flag, why have they bothered to outline 4 different ways of doing it? And that's my point, is these are not obscure because they're not there. They're obscure because you haven't heard of it. And think of it this way. When you were 16, you didn't know anything about life insurance. But when you get married and you have your first children, all of a sudden you're thinking, you know what, I probably should look into this life insurance thing because it's probably something I ought to have. You didn't know about it as a kid because they don't teach it in school. And this is the journey of being an entrepreneur. Being an entrepreneur is you have to learn things that are not fun. I mean, if you're a designer, that's what's fun to you. Doing the accounting and billing for the design work is not fun, but that's part of it. Accounting is a stream of kind of consciousness that runs through everything we do. And the tax code is a huge way that you can save tons of money. And a lot of people make the mistake of thinking, well, I'll just out earn it. And the tax code is graduated. So it's the exact opposite is true. It's just like running with ankle weights on. And the faster you get, the more ankle weights. You go from $100,000 in income and you pay 25% in tax. But you're paying 25% on the adjusted gross income. So you're taking deductions against that $100,000. But if I go to $1 million in income, do I have as many deductions? No, I've already taken them. So if I'm writing off my mortgage interest and I'm writing off my children and I make an extra $100,000, that extra $100,000 is taxed fully because I don't have any deductions against that extra money. This is why when entrepreneurs send their spouses to work, they find out that they're not taking home a lot because the spouse is being taxed on 100% of her income, whereas the entrepreneur is able to write off a percentage of the income. So this is a huge problem. It's a very complex problem, but it's solvable because the tax code is written. So all the advice that we give you, we'll actually give you the code, and we have the power of Google, so you can type in the code and voila, you can actually see the actual code we're talking about. One of the examples I use around the tax code that no one's afraid of is the 401k. Where in the tax code can you find the 401k? Well, it's simple. Internal Revenue Code 401 subsection K. So there's no secret as to where you can find it. 403Bs are the same. The 457 plan, which a lot of teachers will use, in the tax code. So they're not afraid of these because they know it, but they are afraid of 132J4. Why? It's code. What is 132J4? It allows me to deduct an on-site health facility. What is that? Well, if I have a home office, I can actually deduct my swimming pool maintenance. It's in the code. So it's obscure. It's not huge, but it's something. And if you're paying $200 a month for a pool maintenance person to come to your house and you're in the 25% tax bracket, do the math. 2,400 times a year times 25%, you're saving $600-700 a year in taxes by taking that one deduction. Why wouldn't you take it? All it is changing your accounting from on high from you know earning the money, paying the tax, getting into your personal account, then paying the pool guy. Now we're paying the pool guy directly out of your business account, and that's the way much of the tax code is written. There's what you earn, then you pay the taxes, and then you spend it. What if we can earn something, use that money before it gets taxed? My glasses, healthcare. What's interesting about Obamacare, which a lot of small business owners hate, especially ones that have more than a few employees, they actually can use Obamacare. They can use old tax codes. In fact, we use a 50-year-old tax code to offset all of the impact of Obamacare. And we are lowering, using the tax code, we are lowering healthcare expenses by 20 to 25%, some cases as much as 50%. But because we're using the tax code, Obamacare is part of the tax code. And we have tax codes to offset the new taxes. What's interesting about public politicians is they will come out with new tax code, but they don't fix anything that's already there. So all they do is kind of create this Frankenstein's monster by adding on to what's already there without eliminate what's already there. Well, that's good for us because they can add something and we can say, okay, what's already here that we can use to offset this new thing. And so that's what we do. The savings for our clients is on average $21,000, as you mentioned at the top. But the reality is we're saving far more than that, because if we save $21,000 in federal taxes, you live in California. So what's that going to do for your state taxes? State taxes are usually tied to federal tax returns. So whatever your number is on federal transfers to your state. So if I save you, a reduction of 10%, let's say you paid $200,000 last year in taxes and now you pay 20. Well, if you paid $100,000 in taxes on state, now you're paying 10. So, or a fraction of what you paid last year. So I'm saving on federal and state. And if I can show you how to save money on federal and state, you're also going to pick up some savings on payroll taxes. You're going to pick up some savings on believe it or not, your sales taxes. So all these things start to compound. And all we're doing is guarantee that we're saving you money on federal. So it's very powerful what we're doing. It's very exciting because we change lives. I'll give you an example. We have a client that owns 6 fast food restaurants, large national, actually worldwide chain. Whatever burger restaurant you're now thinking of right now, that's what they own. So they make quite a bit of money per restaurant. Great American success story. Immigrated to this country, worked on the front line, flipping burgers. These people that are reviled by a lot of people, but they flip burgers, saved all their money, and then bought a franchise and then bought another franchise and didn't take a single dime out of the franchise until they got the 3rd store. Now they're making $250,000 a year per franchise. When we did their tax plan, we saved them over $500,000. That allowed them to hire several full-time managers and take their first vacation ever. This is the type of stuff that we're doing. This is money that they were just writing to the federal government that they didn't have to write. All they had to do is reorient their accounting a little bit. So very, very powerful stuff. And I like to throw out the big numbers because they're dramatic. But for the people that are listening that are smaller businesses, think of it as percentages. If your taxes last year were $20,000 and I can save you just 10% of that number, $2,000, that's a big difference. So, $500,000 to a big business owner is worth maybe $500 to a small business owner. The percentages are the same. And what's interesting about the tax code is it's not designed for the rich. It's actually designed for the small business owner. And we've tried to design our business around the ability to help them, because the rich people can hire their attorneys, and they'll these attorneys making $500 an hour will figure out how to save those rich guys money. But what about the little guys like you and me? So that's what we designed the firm around, is to help the little guy find money that they can use to finance their business. Who knew that the tax code can help you grow your business?
Right. I mean, I thought I was supposed to do the opposite, right? And so if someone is sort of like looking at the amount of taxes they're paying, or looking at their business, and they say, there's that gap where, they themselves have, I think a lot of us have kind of fallen down the rabbit hole where we hear a lot about all these different things we should look into or do with our taxes, and kind of ended up doing all this research. And on the other hand, like you said, a lot of the CPAs themselves, they don't have any training on how to save on taxes. So I mean, what what should someone do? Like, should someone like find a CPA who has been trained by you, or you mentioned a tax plan? Is that a kind of thing where you can figure out the plan and then they can take that to the accountant, or how does someone, if they want to reduce their taxes and they like a lot of these things, like what is the course of action
So
for
these are
someone?
very practical questions. So I commend you for that. You obviously are an entrepreneur because you have an idea and then you're like, how do I do this? So the idea of saving taxes sounds, yeah, I want to do that, but how? So we actually created a product, and the product's called a tax blueprint. So just to use an illustration so you can kind of understand how you need to kind of shop for this. If you can't get to us, then you're going to have to shop for it. So think of it as an architectural plan. You need somebody that will create an architectural plan, which is do these 10 things and you'll save $20,000. But then at some point, you're going to need someone that builds the house. If you have a blueprint for a house, you don't have a house. You still got to build the house. And then you've got to find someone that will furnish the house. So a furniture might be a 401k. If the tax plan says if you set up a 401k, you'll save several $1,000s, and we help you orient your accounting so that you can fund a 401k, someone has to do the 401k. So we use that illustration when talking to clients is we do all three actually. And that was not on purpose. We were hoping not to do all three. We wanted just to do the tax plans so that we can get to more financial services products. And we kept trying to bring accountants in, and they would just kept throwing up barriers. We would show them in the tax code. We'd ask questions, is this legal, moral, and ethical? And they would say yes. Then why aren't you letting your clients do this? Because I'm not comfortable with it. Why? If it's legal, moral, and ethical? Well, I'm just not comfortable with it. I actually had a joke in the office that I'm going to trademark I'm not comfortable with it, because that way every time an accountant says it, at least I get paid. Because right now, every time accountant says it, I'm not getting paid. So we decided to get into the business, the old, if you can't beat them, join them. We had the exact opposite. We couldn't join them, so we decided to beat them. So we now do the whole thing. But if you love your accountant, you can buy a blueprint from us. We'll do the design. We'll show you in the tax code where all the designs are, and we will work with your accountant to implement the design. If the accountant resists, which is what happens 90% of the time, then most of our clients fire their accountant and hire us because we're not breaking any laws. We're actually using the laws. We don't have to break laws. The laws are so good, we'll just use them. So that's the kind of the approach that we use. Blueprint to home building to furniture. We'll help you through all of it or none of it. You can hire us for the blueprint and hire other people to do the rest of the pieces, or you can figure out the blueprint yourself and then hire us to do the home building, which we call the tax operating system. So any part of the cycle we'll help with. But our goal is to make sure that you're taking money out of the hands of the federal government, putting in the hands of your business, because you earned it. They didn't earn it. You earned it. So yes, we need to pay taxes. Yes, we need roads, but paying more than your fair share and more than the law allows, then that's just foolish. So you don't want to pay more than you have to. So take that money back and put it into your life and buy a lake house or something.
Right. I mean, it makes a lot of sense to me. And so as far as like you said that that it with your company, like a few people go with the whole, you do the tax blueprint and take it to their accountant, but what do most people go with? Do most people go with like the full service kind of thing where like you do everything for them?
Yeah, so this was an interesting thing that we identified real early, and it kind of surprised us, and I actually have a quote, if you get the taxes right, everything else falls into place. And the problem we have in in the business world right now is that accountants are good at bookkeeping and tax returns. So they're good at tax preparation and recording of historical data. They're not really wired to proactively plan. Well, financial advisors are wired to proactively plan. The problem is that most financial advising firms are product sales firms. So they either sell annuities or mutual fund portfolios or insurance products, but they're not really good at understanding how what they're doing is affected by taxes. So we ran into this problem in the marketplace, is that the solution to the problem is a solution that didn't exist. Well, I take that back. It does exist. It's called a family office. So if you have $20 million or above, and you want to invest that $20 million, there's this thing called a family office. You can Google family office and it'll explain it to you. And they will integrate everything. They'll make sure that your taxes are integrated with your insurance, are integrated with your wealth management strategy, are integrated with all your estate planning and all the legal aspects of all the entities you have, all under one roof. But most of us don't have $20 million, and I want that. I want that thing where I can go one place and everything is talking together and nobody's selling me stuff I don't want. How do I get that? Well, it doesn't exist, so we built it. So we trademarked Fractional Family Office, and so we've built it. But we have to start somewhere, and we don't want to start with product. We don't want to start with a single strategy. So let's start with the tax code. So if we start with the tax code, everything kind of, it's like a flower that opens up, and now we can see how everything you're doing is connected to the tax code. So now we're not making decisions to have a 401k because everybody says to have a 401k, which, by the way, 95% of the people listening should not be in a 401k. But it's a very profitable product for the financial services industry. So because it's profitable for them, they sell it to everybody. But being a hammer looking for a nail is not a good business strategy. What we try to do is look at the taxes, see how the tax code affects you where you are today, and build strategies around that. I get lots of calls from CPAs saying, should I set up a solo K? I said, why are you setting up anything with a K in it? There's lots of cheaper ways to set it. Why don't you just do an IRA? Are you going to put in more than $5,000 a year? Well, no. Then why are you setting up a 401k? Just do an IRA. So those are the type of questions that we're going to ask because we don't sell anything. We're agnostic to products and strategies. We don't care what you do. What we want is to extract as much money out of the hands of the federal government, put it back into your hands, which is the American entrepreneur and small business owner, which is what drives everything. The election means nothing. Small business owners and entrepreneurs mean everything. We drive the economy. Whoever's in office, we're going to adapt to whatever they give us, and we're going to give that back to the small business owner so that they can be more effective in their job. And ironically, the tax code is written so that small business owners can use it, and they're just not.
Awesome, and they should
be.
So if they're hearing all this and they say that, okay, this is like hitting a lot of check boxes for me, and I want to continue forward, and I want to either get the tax blueprint or get the that package where the family office where everything works together. I mean, where should they go? Like, what sort of website should they go to? And once they're there, what should they be paying attention to and clicking
So
on?
I'll throw out a couple of things. So first of all, we're a publicly traded company, so you can look up Financial Gravity and you can find us. So we're out there. We're not trying to hide. The second thing is go to lowertaxhigherprofit.com. And this is where I'd actually recommend starting. Instead of calling us first, there's a video series. And the video series will walk you through, and we actually have a free book that has the 10 biggest mistakes that small business owners make as it relates to taxes. So you'll be able to see, hey, I'm making these, and then you can decide whether you want to engage with us. So this is a great way for you to kind of lurk on the fringes and determine whether or not you want to dig deeper with us. But you'll get a free video series of me explaining how this stuff works with a free book. If you just want the free book, go text to 33444, the word TAXBOOK, all one word, 33444, and you'll have you'll get a text, and then all you do is you type in your email address, and we'll send you the free book. So a lot of ways to get to us: Financial Gravity, lowertaxhigherprofit.com, or text to 33444 TAXBOOK. One of those will allow you to get an idea of who we are, what we do, and whether or not you want to fully engage with us.
I like that, and I like the way that people can just sort of get the toe wet in the water just a little bit, because sort of as we said, like there are a lot of things that people might come across that they might be wary of just because it's new to them. It's not new to anyone else, just because it's a new concept that they haven't heard of before. And so this is great. So this way people don't necessarily have to throw away what they're currently doing right now, even though it should be changed. But this way they can keep doing what they're doing. They can learn a little bit about you guys and how you guys are different, and what what kind of course correction needs to happen. And then once they kind of feel better about it, then they can take those next steps with you. So like you said, text in the text message to 33444 TAXBOOK, lowertaxhigherprofit.com, and Financial Gravity. And so thanks for hopping on the show today, John, because I know that like we said, for a lot of people, taxes either aren't aren't sexy, or they think I don't need to worry about them yet, or they think God will just make more money to cover up for it. And so it can kind of be like a scary and kind of a nerdy and sort of a weird area to get into, but everyone needs to be very aware, especially us home-based entrepreneurs and stuff like that. And so thanks so much, John, for coming on and sharing your tax advice and sharing your unique insight. I really appreciated it.
My pleasure. That's what I'm here for.
Want to listen to more fantastic episodes of The Robert Plank Show? Subscribe to us at robertplank.com/iTunes and browse past episodes at robertplank.com.